You placed an order. It said filled, but the price didn't move. Strange? Not really, because the truth is, your trade never reached the market you thought it did. It was rerouted, redirected, hidden, pushed into a system designed to look like finance, but feel like fraud. A shadow market, built by insiders, protected by regulation, invisible to everyone else. It's called a dark pool. And right now, it handles nearly half of all trading volume in America. Not underground, not offshore, fully legal, fully weaponized. Every day, retail traders walk into this system blind and walk out drained. Because this market isn't just invisible, it's engineered to beat you before you even begin. Today, you'll see how the trade you thought you placed never had a chance. You've seen the ticker, the flashing green and red lights, the illusion of transparency, the idea that every trade, every price, every move is happening in front of your eyes. But what if that wasn't true? What if nearly half of all trades in the US didn't happen on any public exchange? What if the market you see isn't the market that decides? This is not theory. This is not hidden in fine print. It's real, and it has a name: dark pools. Originally created in the 1980s, dark pools were supposed to solve a single problem. Big institutions like pension funds or sovereign wealth funds needed to move massive positions without tanking the price. So regulators allowed them to trade privately, quietly, away from the noise of Wall Street. No quotes, no price discovery, no visibility. Just two parties, one buyer, one seller. No one else needed to know. That was the origin story. The promise was simple: efficiency for giants, no harm to anyone else. But over time, that promise mutated. Dark pools exploded, from elite exception to common infrastructure. In 2008, they made up less than 10% of trading volume. Today, over 45%. More than 1 in every 3 trades happens where you can't see it. And this invisible market isn't limited to the old institutions anymore. It's become a playground for high-frequency traders, a tool for market makers, a black box for anyone who knows how to use silence as a strategy. Here's what that means. 2 traders can agree on a price far from the public eye and execute it before anyone else even sees it. They bypass public bids. They dodge public asks. They don't add to the price you see on your screen. But their trade still moves the real market behind the scenes. Imagine you're buying a stock. You see the price, you hit buy. But what you're seeing isn't what's real, because the real action is happening in the dark. And there's more, because these trades done quietly, off the record, don't help discover the true price of an asset. They don't add liquidity, they siphon it. Public markets become less accurate, more fragile, easier to manipulate, and yet the system encourages it. Why? Because in the shadows, power consolidates. In the light, they compete. But in the dark, they collude, silently. Dark pools aren't illegal. In fact, they're perfectly compliant. But here's what no one says. Compliance doesn't mean fairness. Transparency isn't required. And for the everyday investor, that means one thing. You're always playing with a delay. You're always behind the curtain. You're always trading in a mirror while they trade in reality. Now, here's where it gets worse. Because even when your trade seems instant, it may never touch a public exchange. And the people who route it elsewhere, they get paid for doing so. Who pays them And what's in it for them? We'll get there. But first, ask yourself this. If nearly half the market has gone dark, who still controls the light? And more importantly, who decides what you're allowed to see? You place an order. You think it goes straight to the exchange. But before it ever sees the light of day, it's already been sold, rerouted, repackaged. That's not a bug. That's the business model. Most retail trades in the US don't touch a public market. Instead, they're intercepted and redirected, often to the very firms betting against you. It starts with something that sounds harmless: payment for order flow. Your broker doesn't charge you commissions anymore, but that's not generosity. It's a trade. They send your order to someone else, a market maker, who pays for the privilege. Citadel, Virtu, Two Sigma, these aren't just names. They're the ones actually filling your orders, and they're not doing it out of kindness. They buy your order before it hits the market, because they already know what you're trying to do. They see the direction, they see the size, and with that, they can do what you can't: react in real time. They call it internalization. You place a buy order, they sell it to you from their inventory. They might even give you a slightly better price than the public bid. Seems fair, right? Until you realize what's missing. Your order never reached the market. It never moved the stock. It never contributed to price discovery. It lived and died in a private system, controlled by someone who was never on your side. Now multiply that by millions of trades every day, and you get a market that reacts to retail without ever letting retail move it. That's the lie. Your screen shows the public price, but you're playing in a separate lane. Your price isn't real, it's simulated. And your execution? It's as good as they want it to be. There's no transparency, no way to verify how many better offers were skipped, no way to know if your trade was front-run, delayed, or buried. And the brokers? They'll tell you this system provides price improvement. They'll cite fractions of a cent saved. They'll wrap it in data, in PDFs, in legalese. But here's what they won't show you: how much more you could have made if your trade had gone to a real market. Because in this system, best execution doesn't mean best for you. It means best for the one routing your order. And who decides where your trade goes? Not you, not the market, your broker. And here's the kicker: the broker doesn't choose based on price. They choose based on who pays them the most. In 2023 alone, Robinhood made over $700 million just from selling your orders. That's more than they made from users directly, more than they made from interest, more than they made from anything else. So when they say commission-free, it's not free. You're just not the customer anymore. You're the product. And while your trade is being sold, sliced, and rerouted, the firms buying it are doing something else entirely. They're building a map, a live, second-by-second map of what retail is doing, where it's going, where it's weak. They can see patterns before they form, trends before they break out, momentum before it even starts. And once they do, they act. Faster than you, smarter than you, because they already know what you're about to do. You never stood a chance. But that's just the surface, because not all trades end in dark pools. Some end somewhere even more obscure. A place where trades move billions without ever appearing on any public record, where rules don't apply, where regulators don't look, and where one firm, above all, has built an empire in total silence. So the question is, where exactly are these orders going? And who's controlling the destination? Not all dark pools wear the name. Some hide in plain sight, not as exchanges, not as brokers, but as something in between. They're not required to report trades in real time. They're not regulated like exchanges, and they're not open to the public. Yet, they move billions every single day. One of them is called Citadel Connect. It's not listed as an exchange. It's not registered as an ATS, an alternative trading system. And yet, it processes a staggering share of retail orders. Citadel doesn't advertise it. There's no website, no live quotes, no order book, no visibility. But according to filings and leaked documents, Citadel Connect operates like a private marketplace, a high-speed internal matching engine fully controlled by one of the most powerful market makers on Earth. Here's how it works. Your broker routes your order to Citadel, but instead of filling it immediately, Citadel sends it into its own network, a private corridor, a fast lane invisible to public markets, where Citadel can choose if, how, and when to execute it. They can hold it, match it, delay it, or ignore it. And because Citadel isn't a registered ATS, they don't have to disclose any of that. They don't publish statistics. They don't show execution quality. They don't tell you how many better prices were skipped. And still, they're allowed to handle massive volumes of US equity trades. In early 2021, during the GameStop frenzy, Citadel Connect's volume surpassed the NASDAQ in several stocks. Let that sink in. A private, unregulated trading venue run by a single firm was moving more volume than one of the world's largest stock exchanges. And no one knew. Not the public, not the traders, not even the other market participants. Because Citadel Connect lives outside the system, but feeds off it. They can see the entire retail order flow. They can choose which trades to execute and which to let die. And they can do it all without anyone watching. They say it's efficient. They say it's legal. And yes, it is. But what happens when one player controls the game board, the dice, and the scorekeeper? What happens when your orders are routed through a system that isn't accountable to the market, only to itself? That's not just asymmetry, that's architecture. A structure where the house always knows more, moves faster, and plays both sides. And here's the twist. Citadel isn't alone. Other firms have built similar internal systems, but none match its scale. None operate with such reach. None have the same access to retail flow from apps, brokers, and platforms you use every day. So while you're watching the price, they're watching you, mapping your behavior, identifying weak hands, positioning before you even click. And when regulators asked for transparency, they say, "We're not an exchange." They say, "We don't need oversight." So the question becomes, if Citadel Connect isn't an exchange and isn't a dark pool, then what is it? And more importantly, why is it allowed to exist in the shadows while moving the market from within? By now, the pattern is clear. There's a hidden system rerouting your trades, a private lane where one firm decides how and if your order gets filled. But here's where things turn colder. Because even when this structure is exposed, even when it's documented, even when the outcomes are questionable, it's still allowed. Why? Because technically, it's legal. But legality isn't justice, and regulation doesn't mean protection. Let's start with the ones who got caught. In 2015, the SEC fined ITG, one of the largest dark pool operators, $20 million. Why? Because they were secretly trading against their own clients inside their pool. In 2016, Barclays and Credit Suisse paid a combined $154 million. Both firms had misled clients, manipulating data inside their private venues to favor preferred players. In 2022, Liquidnet was fined $5 million for failing to protect client information in their dark pool environment. These were not underground operations. They were institutions, registered, respected. And still, they used the system to cheat. The message was clear. Dark pools could be weaponized. So the SEC stepped in sometimes, but not always. Because while those firms paid the price, others walked untouched. Citadel Connect, despite its scale, despite its opacity, despite its complete lack of ATS registration, has never faced a single regulatory penalty for the structure of its routing system. No sanctions, no forced transparency, no reclassification. And yet, by its own design, it functions exactly like the platforms that were fined. So what's the difference? Size? Influence? Lobbying? Citadel has poured millions into political campaigns, staffed former regulators, and built a reputation for liquidity provision that shields it from deeper scrutiny. And the irony? When Citadel was asked directly why Citadel Connect isn't regulated as an ATS, the response was, "We're not required to." That's it. It's a regulatory gray zone, one that no one dares to define because defining it would require regulating it. And that could slow down the game. Because this isn't about fairness, it's about structure. And structure always protects the architect. You were told the market is fair, that trades happen in a neutral arena, that regulation keeps the system clean. But the reality? Only some firms face scrutiny. Only some platforms get audited. Only some practices get called out. The rest? They operate in silence, because silence is the most valuable asset in this game. And here's the part that burns. While the SEC investigates old cases, new structures are already in play. New systems, new lanes, even more advanced forms of internalization that fall outside every existing rulebook. And the average investor still thinks they're trading in public, still believes they're protected, still doesn't know that the real market, the one that decides price, volume, and direction, might not be regulated at all. So ask yourself, if the law isn't designed to protect you, who is it really protecting? And if this much is legal, what's still hiding behind that word? You didn't see it happen. There was no alert, no warning, just a few cents missing on every trade, every time. That's how it begins. Because when you operate inside a system designed to obscure truth, the damage doesn't scream, it whispers. Dark pools don't rob you in one blow. They drain you by design, quietly, efficiently, legally. Here's what they don't show you. Your order was routed away from a better price. Your execution was delayed by milliseconds you couldn't detect. Your trade never helped move the market. It only filled someone else's pocket. In isolation, it feels like nothing. But over time, it's everything. According to independent studies, retail traders lose an average of 1.3% per trade in slippage, inefficiency, and price fragmentation. Not because they made bad choices, but because they never saw the real price to begin with. This isn't about losing money on bad bets. It's about never getting the full value of your best ones. You're not competing. You're being contained. Because when orders are routed into private lanes, when visibility is removed, when trades happen in silence, price discovery collapses. Liquidity dries up. Volatility increases. Market spreads widen. And the illusion of efficiency masks the reality of imbalance. And yet, the system persists. Why? Because it works. Just not for you. It works for the firms that pay to see the flow. It works for the platforms that get paid to sell your order. It works for the algorithms that scan, adapt, and strike before you even finish clicking. And when the market shakes, when panic hits, when liquidity matters most, dark pools vanish first. They don't offer bids. They don't support the price. They go dark, by definition, leaving retail traders exposed in the open, naked in a storm they never saw coming. During the 2020 crash, dark pool volume plummeted by over 40% in a single week, while retail orders surged, desperate to exit, forced to accept whatever price the public market would give, without any help from the private one. That's the cost, not just in money, but in trust, in truth, in the belief that the market was ever fair to begin with. And still, the system doubles down. New routing strategies, more internalization, even smarter execution layers designed to simulate price movement without actually reflecting real demand. You're trading against shadows. You're chasing reflections. And every time you act, you reveal more than you receive. So here's what you need to ask. If nearly half the market operates in silence, and that silence creates losses so small you never notice, how much have you already paid without ever realizing it? And more importantly, who designed a system that only works when you don't see how it works? You thought you were trading in a free market, but what you saw was a simulation. You placed your order. They saw it first. You paid your price. They chose it for you. And all of it legal. All of it invisible. All of it working exactly as designed. Because the system was never broken. It was built this way. Not to steal from you loudly, but to extract from you silently. Trade by trade. Click by click. Belief by belief. Until one day you ask, if nearly half the market hides in darkness, was it ever a market at all? Or just a machine draining you while you thanked it for being free? If this opened your eyes, don't let it end here. Like, subscribe, and share this truth before it disappears again.